People move markets, and what you think will happen is never quite what happens. And so the goal is think about what could happen and then build cushions of risk around it. Trading is a tactile thing. You can't sit around and just yap about it and be good at yapping about it unless you've been digging into it.
Mathematics are super important from just the probabilities side of things. Just knowing that you could plan everything out correct and you're still like 40% of the time you're going to be wrong.
The market is driven by emotion, and that emotion is always anchored on a fear of being wrong or a fear of missing out. When you have a regular portfolio and you trade stock, if you trade in and out or you trade options, you use up your buying power. Whatever buying power that was used to get into that trade, it's wiped away from the day. So when you're in the futures market, none of that matters.
That's awesome, but I'm supposed to be talking you up. Remember, this time we've switched spaces instead of.
Well, that's the thing about friends. We can't help but say nice things about each other. So we're all good.
I was trying to think of when we first met too, and I remember it was at I think a Benzinga conference.
Yes.
Way pre-pandemic, right? It's funny how our brains go pre-pandemic, post-pandemic for everything. But
I think it might have been 2014, or
it may have been. It was certainly a long time ago. It was well before this thing too. So this didn't exist at the time.
That's definitely. Actually, I didn't even think that you had any gray at all, not even on your temples when I first met you.
No, that probably came after the first child. And then we have another one on the way in a couple weeks. So next time you might be all white by then. We'll see. Who knows?
Kids will do that to you.
Yes, it seems so. It's getting grayer by the day. But so let's get into some trading talk. So you talked about how you're trading for 20 years. I always like to just get started with kind of a baseline of why, right? So you told us for how long, but what initially kind of got you into the game? Because we all get bitten by the bug somehow, and it's all completely differently. So I'm wondering how you got bit by the bug.
So I had run two businesses before I began to trade. And so I have really been self-employed most of my life. The last time I actually had a boss, I was a recruiter. And then I saw how she ran the business and I went, I think I could do this better. See ya. And so I left and opened up my own. And I did that for 14 years. And before that, I was a neuroscience researcher. And it was a great love because I love statistics. I love watching people, and I love mathematics. And so that sort of all came together. And it's a great field, but unless you want to live in a one-bedroom apartment and eat ramen noodles, there's sort of no updraft there. And so I moved into the recruiting field, recruiting people like myself. And I had done that for 14 years and I was just getting burned out. And I happened to see, those Success magazine things, everybody comes and, you normally send your salespeople to them. So I had a couple of salespeople, and I went there to this Success magazine thing, and I saw a guy. I don't even know where he is now anymore. His name was Phil Town, and he was showing off the Thinkorswim platform, and he was showing off the MACD. And he said, "You buy here and you sell here." And I thought, how hard could this be? Come on. I'm a smart girl. And so I was immediately bitten by it. And I thought, okay, this is something that I can put my arms around. And what I quickly realized was that people move markets, and what you think will happen is never quite what happens. And so the goal is think about what could happen and then build cushions of risk around it. But it took me about 10 years to figure that out. And the old joke of how do you turn, how do you make a small fortune in the market? You start with a big one.
Yeah.
And that's the old joke. I lost so much money because I thought, okay, people will buy here, people will sell here, and that's reasonable. Good jobs number means market will go up. Bad jobs number, market will go down. And
Hmm.
so you just have to, trading is a tactile thing. You can't sit around and just yap about it and be good at yapping about it unless you've been digging into it. So people who don't trade think they know all about trading, and people who do trade, when they talk to people that don't trade, in the back of our minds, we're like, okay, I'm just going to listen because I don't want to argue with this person. They have no idea what's going on.
I always say that you can usually tell, especially on Twitter, which it is what it is for a place for traders. But you can usually tell whether or not the person's a serious trader versus not by how much in absolutes they speak. Right, a professional trader will be like, oh, SMCI is up a lot. It didn't react as well as I thought to the S&P 500. Maybe I'll take a shot here. I'm probably wrong. And then a pro or a amateur trader will say, yeah, that's the top. I'm going to short right here, because as the longer you've been doing it, there's no way to be right all the time. That all we're doing.
Absolutely.
I love the talks about mathematics, because I think even if you're not going to get into kind of the quant side of things, mathematics are super important from just the probabilities side of things. Just knowing that you could plan everything out correct and you're still like 40% of the time you're going to be wrong, and it's just the way it
Exactly.
is, right?
Yeah.
So the neuro kind of scientists and the recruiting, I think that all that's interesting, because if I were to talk to someone right now and they said, what should I be studying? I want to be a trader. I would go mathematics and then some sort of people watching, people management thing, because I think it's the combination of two. So is there
Yes.
anything that you can kind of like point to that you pulled from understanding like this kind of people observing and how they're going to look, on a way that you kind of applied that to your trading? Because I think it's just super fascinating, especially for our viewers, to kind of understand and say, wherever you are right now, whatever you're doing in whatever aspect of life, I think you're probably already building very important tools to your trading. You just have to find how to adapt them to the market.
That is that is a very good statement right there. And so let's talk about that nature of adaptation. And the number one thing to realize is that the market is driven by emotion, and that emotion is always anchored on a fear of being wrong or a fear of missing out.
Hmm.
Those are really the only two things. We'll chase a trade if we're afraid of missing out.
Yep.
We'll hang on to a trade if we're afraid of being wrong. And so, this notion, when you come into the space, you have to realize that it's not hard lines. Everything is a shade of gray, and that's very hard for some people. So, one of the first things I say to someone when I say, listen, you've got to sort of restructure your mindset. And sorry, I just saw a trade hit into my target. I got to get out of there.
That's how.
Um,
Hey, hold on. That's how we're talking about real trading with real traders, because it's either you hear that ding of an
sorry.
order fill, or someone looks up and goes, "Oh, hold on, I have to." But no, that's great. That's what we
Yeah.
do, right?
So, yeah. So, what you have I tell folks, think about this. Listen, you come in, you have your office chair. If 4 out of every 10 times you sat in your office chair, it collapsed into a million pieces, how would you approach sitting in the chair?
I love
And
that.
this is what the market is.
Hmm.
It is literally a space where you think you have an idea about what's going to happen, but on any given day, there's the majesty of epsilon, the
Yeah.
error factor, the risk, the known unknowns, and the unknown unknowns. And so think about it in terms of I have to realize every time I go to the market, I'm going to be in a place that's similar, but never the same. So every time I step into the chair, I give it a little shake. I look down, I make sure my bolts are done. And that's what we do when we are saying, hey, how does the market look? What kind of strategy do I need to approach in today? Is it a buy the dip day? Is it a sell the rally day? And you can do that and compare it to, let's say you have a spouse or a significant other. You know when they're in a bad mood. They got that look.
Yeah.
And so you say to yourself, well, I don't want to cause a kerfuffle here. So I'm going to be nice and easy, or I'm going to go, hey, is there anything that I can do for you? What's going on? Same thing in the market. You sit down, you go, oh, NVIDIA is normally running all the way up. And for the last couple of days, it's sold off of its highs. So I wonder if something's going on right there. Approach the market like an entity that has feeling, and that feeling is going to make them either act, react, or overreact, and one of those things. And put, instead of making it about X's and O's and boxes and squares and lines, look at it in terms of what are the people doing in this chart right now?
Yes.
Turn those charts into someone who might be sitting beside you or across from you and understand that temperament and emotion comes into these candlesticks. And if you are looking at them, if you know somebody's blown their stack, you're not going to try and rush in and do something that's going to make them go worse. And a lot of times when a market starts turning or it starts behaving in a very evocative way, a very emotional way, you don't want to step in front of that. You either want to go, all right, I'm just going to walk behind you. I'm going to follow you along until something looks like thin ice and then I'm hitting the road.
Mm-hmm.
Or you look at it and you go, I don't know how to react with that. I think I'm going to cross my arms and watch.
Well,
And so that's really it.
and a couple things there. So I love your analogy of the chair. It's way better than my nerd one where I just say flip a coin 3 times and tell me the probabilities of hitting heads, right? You just don't. It takes, I think, mathematically like 10,000 coin flips to get a 50-50 result or near a 50-50.
Right. Yeah.
So we're all, even though if you may know the odds of something, you can never predict.
Yeah.
You can never predict the next thing. But secondly, the way that you described the market was actually the same way that my first trading mentor when I was trading at the prop firm described it, that you don't treat it like it's a mathematical thing. You don't treat it. It is essentially a hive mind, and it's a hive mind of humans, and those
Love
hive
it.
minds have the psychology. So what you're really trying to predict is you're trying to predict at what points is that hive mind going to suffer pain, right? At what point does
Yes.
everyone on one side of the boat and they have to move to the other, and vice versa. So I love that, different parts of the world, different styles of trading, different instruments, they a lot of it is still the same. It's still psychological in nature. Now, you mainly trade around in the futures side of things.
Yes.
And so the question I wanted to ask, because I mainly do stocks, and at Trade Ideas we mainly do stocks, but what is the advantage that you would think of somebody who maybe want to branch out into futures as opposed to just general equities?
So leverage is the short answer.
Yeah.
So let me explain just a little bit. When you have when you have a regular portfolio and you trade stock, if you trade in and out or you trade options in and out, you use up your buying power, particularly when you use options, right? If you have the same day option, you go in and then you go out, whatever buying power that was used to get into that trade, it's wiped away from the day. So when you're in the futures market, none of that matters.
Hmm.
You can go in and out 50,000 times doing anything you want. You never leak into your buying power. It remains exactly the same. You can have also margin depending on, you could have 10 to 1 if you've got portfolio margin. It's normally 2 to 1 if you're regular through the trading day. No, 4 to 1 during the regular trading day, 2 to 1 in the overnight. So there's a tremendous advantage of leverage. The second thing is a tax one. And when you trade the futures, they are called Section 169, and they are taxed at capital gains for 60% of your trading profits. And so it ends up being the triple whammy in terms of being able to use the same pool of money over and over and over again, as well as having the tax advantage to being taxed at a lower rate. On top of that, you don't have to study anything but your instruments, right? When you're in a stock market and you're trading equities, if you're looking for movers, you can also look for movers in your futures, but I tend to stick with the big five. That's the ES, the NQ, oil, gold, and the YM. And those are sort of my five that I sit in. That in itself is fantastic. Now we know the story that more leverage is only good if you know what to do
Yes.
with that leverage.
Yeah.
It is, imagine if I were not skilled in price action motion, it would be like me taking out, um, I don't know, some kind of skill saw and trying to use it. It would be hair, teeth, and eyeballs in 35 minutes. I'm
Hmm.
positive. And so that's the one thing that you want to be very, very careful about. Now, the options market and futures options and the futures in itself have realized that. And so they brought in the micros. And the micros will allow you to learn the rhythm of trading without experiencing massive leverage events. And that works out very nicely. But if you stick with micros, you're going to end up spending a lot of money in terms of clearing fees and the like. And so you might want to learn with that versus trading them uh, overall.
Yeah, and those micros, for the little experience I have trading futures, that was a fairly new development, wasn't it? They weren't
Yes,
they weren't
yes,
always like that.
yeah, yeah.
Um,
They're
yeah, so
they're they're really new.
if anyone was interesting, that I totally agree, because with the ES or the S&P 500 futures, you're talking $50 a point. So for people with smaller accounts, that could be problematic. And I'm glad you brought up the double-edged sword part of leverage, because you're right. It's great as a way to express something with using less of your overall capital. But you're right. If you don't know how to use it, if you're like we talked about earlier, if you think you know for sure what's going to happen next, it can definitely cause some problems. So I want to go quickly and talk about, because I have your book page up here, and I want to talk quickly about your book. And again, it's just called The Trading Book. I think you probably got the best name on the planet there. And there it is
My
on.
publisher chose it. She was like, "Why don't we just call it the trading book?" I'm like, oh, "Okay."
That seems just brilliant, as
Yeah,
opposed
I
to a lot
know.
of the
I
long-winded
know.
kind of names that you get. So, first of all, how how hard was it to write a book like this? And then also, what was your motivation of doing it?
So it was pretty hard, and my motivation to do it was the following. I felt like I had struggled so hard in trading. I literally have made every single mistake known to man except going all in on margin.
Mm,
Literally any other mistake that might be around, I would have made it, right? And so I felt very lonely trading because way back when I started, back in the aughts, they didn't they didn't have the Fintuit community. I mean, they had some places where people had rooms and such, but you had to know the right people to talk to. And then when you did bump in to traders that were very accomplished, they didn't want to tell you anything. It wasn't there, nobody was sharing anything because everybody felt like, well, I don't want to tell you because then I'm going to give up my edge.
yeah.
And I have to tell you this, Mike Bellafiore said this, and he's from S&B Capital.
I have a
He said this a long time
couple
ago.
sign books from Bella. So yeah,
Yeah,
I've met him.
he's
Yeah.
so cool. He's just the coolest guy. But he said, listen, I'm never going to be that guy because I'm going to tell you what. I could break down every single element of my trading strategy and give it to you, and you still wouldn't make the returns I would make.
Hmm.
And I embraced that. I thought, hey, trading is such an individual thing. You have to take what someone says, roll it around in your head, see which parts fit for you, and then take those parts and leave the rest and go make it yours.
Yeah.
Right? Now, we know there are some very common rules, like don't ever fade a trending Friday, or don't, there's
Yeah.
certain things you go, nah, you don't want to do that. Don't put on a huge position before the Fed goes. Don't trade right into the first mood of any, there are all those
Hmm.
kinds of little things. But in general, when I started, nobody was really sharing in the communities that I was in. And I said, you know what? I figured this out and I want to share it. And, you know, the Lord always looking out for me. Out of the blue, an editor from McGraw Hill calls me up and goes, why don't you write a book for us?
Wow. Yeah,
Yeah.
that's amazing.
So I know. At the same time, I was talking to a couple of other people that were really, they were sending their manuscripts all over the place. And I'm like, I am not going through that. And
Hmm.
literally, she called me out of the blue, I had already written a lot of it because I was like, I need to put my thoughts down. And when I read them, I need to make sure they make sense so that if somebody says to me, hey, how do you do that? I won't be humming and hawing. I won't, well, it's kind of, I didn't want to do that, right? I wanted to give them something they could go, okay, I'm going to take that back and see if it works for me.
Yeah.
And that's what made me do it. And that's how she made me do it. She said, all right, I'm going to give you an editor and we're going to get this going. And, it took about 4 months to write it
Wow.
properly and then 2.5 months of editing. And then there she went. And it still sells really, really well. It still sells really, really well. And I think I published it in 2010.
Well, yeah, and I've read it. Highly, highly recommend. And it's interesting you talk about getting your thoughts out on paper as a way and a reason that you did it. Because we were talking in the green room. I was speaking to Brian Lund yesterday, I think, or late last week, and he said the exact same thing. Because I asked him because he, has a very very good writing style,
Yes.
and a very good
Very
blog. So
good.
I asked him the same thing. I said, "Why do you get started?" And he's like, "I just got started because I felt a need to put what was going on in here on paper as a way to just get it out there." And didn't ever expect anyone to read it, and then all of a sudden, fast forward how many years later, and again, he's very
Yeah.
successful at it. So that might be a good tip for anyone who's watching this, is if you're trading and you're either struggling with it or you just think there's a lot going on in your head, just put it out there. We live in the age where you could write it for yourself where no one could see, but you could start a blog or do it on Twitter or X or whatever they're calling it now, or wherever you want. Because I think that that's a great thing. For me, it's videos, right? I make a lot of videos, and that has a lot to do with me just getting, thinking through what I'm thinking about with the market. So I highly, highly recommend that. And again, it's a very great book. Now, I want to talk about place your trades, because this is when I was talking about before, when I was on with you before, talking about this
Yes.
as well. So just tell people a little bit about what you're doing here, because I think it's absolutely fascinating what's going on with place your trades.
So, Place Your Trades is an incredible space started by Anthony Crudele of Futures Radio. And the goal there is to bring people together and introduce them to the newest instruments that are coming out through the CME. And the CME is building products with people that trade in mind, and they want to help more people be comfortable trading these products. And one of these amazing products is called the event contract. And it is a contract that expires daily, but I just finished a trade in here. So this is perfect.
Yeah.
We were at a baseline support, and these particular contracts used to be $20 contracts, but now they can pay out up to $100. So you can buy them for as little as $1. And at the end of the day, it could be worth as much as $100.
Wow.
Usually the sweet spots are in the middle, right?
Yeah.
It's like trading oil, it's around the 30s and the 80s. You kind of
Mm-hmm.
get those squishy spots in there. So, what you can do is you can look at the market and you can say, I suspect we're going to move away from this particular number. We don't know what direction we're going to move it, but we're going to position and say, I want to learn how options work. And so today we were hovering around the 5096 number in the E-mini S&P futures, 5096. And I said, that's a really important balance zone. We aren't going to stay there. We're either going to move up or we're going to move down. And so you can go out and buy one of the contracts that says, hey, I'm going to move up. And so I bought one for about $14. And then I bought another one below that said, hey, I think I'm going to move down. And that one was about $17. So I spent about $34 all total. And the goal was at the end of the day, or as price moved, I could make as much as 100, but my stop would be 15. And the market rolled over just as I expected. And I closed one side of the formation for $70. And so doubled my money. Now, my goal is always never trade it into the end of the day.
Yeah.
And if you have a 50% loss, you got to get out. And so, of course, with a 50% loss space, you don't bet the farm, right?
Right. Yeah.
So it's just a great way to get in and understand price motion and get a feel for how the market can shift in the balance and learn where, okay, this is a critical support zone. If it breaks, we've got continuation. If it doesn't break, we have a rebound on the bounce.
Mm-hmm.
And so in there, there's a wonderful Discord, and you can go in there, ask about anything. There's so much talent in that free Discord channel. And you can just ask about, hey, what does this look like? What does the support look like? What are you trading? And the group has got so many good traders in there. It's a fantastic space. It really is. Sorry, I gushed about it a bit, but it's
That's
because
fine.
it's really, really good. It's great.
I love when you were describing that trade there. I love the defined risk aspect of it, and I think
Absolutely.
that's something that, if nothing else, is worth pursuing, because the amount of trader blowups that simply happen from, oh, I'm right, I'm just early, I'm going to move my stop, I'm going to do whatever, and then all of a sudden there's a gap into the next day, and then it continues to run, and you've taken months worth of gains and just completely wiped it out. So having the
Yeah.
ability to say, this is I'm paying $15 for this contract. If I'm completely wrong, it goes to absolute zero and I can move on. I think that would save a whole bunch of traders lives in the long run, actually. So
Absolutely. Absolutely. It's really about developing a discipline around a strategy.
yeah,
And if people are listening and they're saying, hey, I want to be a good trader, I got to tell you, you have to learn to develop discipline around a process.
absolutely.
Because if you don't, forget it.
Yeah.
You're just spinning your wheels. Truly. The market is a very expensive teacher, so you better not have to pay for the lessons over and over and over again. Just every time something happens, I go, all right, what's the lesson here? I have refused to double pay when the market is teaching me a lesson.
Hmm.
I'm not going to let the market do it to me a second time.
And that's actually perfect to lead into the question I'm asking everyone here and getting awesome feedback on, which I always think is way more important than what was your best trade, which is what was your worst trade and what did you learn from it? Because the answers I get are absolutely phenomenal, and I always notice that generally it comes to the trader pretty quickly, but they always have and this is what I learned and this is what I did with my trading and all of that. So what sticks out in your mind as your worst trade?
So it comes to my mind immediately.
It always does.
It was an options trade, and it was intuitive surgical.
Okay.
And I thought for sure, I was in my early years, I thought for sure I knew exactly where this stock was going. I even called up the investors line, talked to people at the website. I'm like, hey, can I, not understanding that they're not good. They don't know anything. It's in a quiet period. Nobody can talk about anything.
Hmm.
But I just thought I had done everything, and I bet big. I mean, I bet big, and I got up the next day, and the stock was down $100 a share.
Yeah.
$100 a share, and I was short puts,
Oh,
a,
okay.
a
Yeah.
ton of them,
Hmm.
because I thought, hey, I'm just going to sell these naked puts. Well, yeah, it was bad. It was the kind of experience where your stomach be,
Yeah.
it's oh,
Physically
I
ill
threw up.
off the, yeah,
Yeah, no, I did. I threw up. I
yeah.
threw up, and
I've been
then
there.
I cried, and then I began with the self recrimination. How
Hmm.
could you be such a moron? Blah
Yeah.
blah 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 blah. And then after the fact, it took me a while. It took me several days to, I don't know if you remember Jim Cramer in the old days when he just started that show. He would always talk about a trade that was put on badly, and he would go, yeah, you don't want to be on the floor on the linoleum floor at the end of the day
Yeah.
with an empty bottle of whiskey,
Yeah.
right?
I
Remember he used
remember
to say
that.
something like that? Yeah.
Yeah. He was wild
So
back in the day, wasn't he?
I know
Yeah.
it was really funny. And so I was really on the floor. Didn't have a bottle of whiskey, but I was just on the floor over it. I was so humiliated, dejected, discouraged, um, just everything. And when I got over that, I said, okay, what did you do wrong? You assumed you knew the answer,
Mm-hmm.
and you did not allow for risk parameters to be maintained so that you would not go careening off the side of a hill. So the trade, I don't know, it lost me maybe a couple $100,000 because it just didn't hold, and it was really bad.
Mm-hmm.
And so I learned that I had to realize that I did not know, even though I thought I knew, I did not know how the market was going to perform. I didn't. I had this idea that I did. Strangely enough,
Yep.
I was in some sort of dreamland that said, oh, you know exactly what's going on in here.
Yeah.
And I didn't. And so it was a moment where you accepted the humility that the market gave you in a package. Yes, I'll take that.
Mm-hmm.
And then I put my ego to the side and I said, you're going to learn how to trade with risk as your primary parameter. If nothing happens, great. But if the risk profile gets met, you're getting out.
Yeah.
And that's how you're going to trade from now on. Doesn't matter what happens on the upside, you just know when this happens on the downside, bye bye. And that really was a turning point for me. Absolute turning point.
And it's funny. A lot of the stories are different securities, different instruments, different reasons, but a lot of the same thing. And going back to what we started our conversation with, that you have to deal with randomness. Like you have to be able to deal with the fact that again, even if you knew what was happening, you're gonna hit the. You could know, like there someone was saying, or Bella, you said that Bella was saying that I could tell you exactly what I'm going to do and you're not going to make as much money because you don't know the future.
Yes.
So for me it was kind of the same thing. I was at a prop firm and we had that squawk box. I don't know if they don't have that
Yes.
anymore, but
I
back in the
remember
day
that. Yeah.
the guy would shout out the news, and it was something. There was a CEO that was indicted and like pulled out of his office. So I brought up the stock and just my whole account into it. And I said, there's just no way that this is good news. And stock went up. And I really don't know why. I don't know if maybe it was one of those, everyone knew that he was going to be indicted. And maybe there was this whole lead up to the story. And I remember it was multiple months of gains was wiped out in just like a single trade. So, and then all the same, I cried too, like all of the same emotional aspects. But you're right. I hope that in this series I can help, and with that question, I can help avoid some people doing the same thing, but it's almost like you have to. It's almost like
I know.
people can say all day long, manage your risk. You got to be around to live another day. You've got to do all this. But until you really get smacked that one time and it brings you, it's the whole, right? You got to let the person hit rock bottom before you can help them out.
Exactly.
I think it's the same
Yeah.
thing. Yeah.
It's strange though. You know what it reminds me of? It reminds me of having a child, having children when you say, "Listen, I don't want you to do that because this could happen."
Hmm.
And they get to that age where they go, "You know what? I'm doing it anyway.
Yeah.
I'll handle whatever's on the other side."
Won't happen to me. Yeah.
And yeah, and our kids will step into those spaces and get into trouble and get into trouble and get into trouble until they go, yeah, I don't, you're right about that.
Yeah.
We can't stop them. They
Yeah.
have to, and I think we all have that passage. We have a natural passage where we go, well, that's not me, or I can handle whatever's on the other side of it. It's sort of like I talk to some people that are so in love with a stock, they'll go, I'm just buying it here. Listen, if it fades, I know it'll come back and I'll just buy more. And they will buy it down to $4 before they go, I probably shouldn't have done that.
Yeah. And you can list to them all of the companies that never came back. You can go, right, Bed Bath and Beyond and Best Buy and Enron and Nortel, and you can say, listen, they don't always come back. But yeah, I think everyone has to have that moment of, oh yeah, no, I don't know what's going on.
Yeah.
And then I think that's what makes a trader, because instantly you now know, okay, I'm in this probabilistic world. I'm playing in probabilities. I have to do the best to make sure that I am understanding that anytime I hit a button, then it could go wrong. And I think I've told this story on here before, but one of my trading mentors, who's great stock picks on Twitter, he every morning puts out a tweet that reminds himself that today could be the day that he blows up his account. And, the guy's been trading for like 30 years.
Love that.
And he's like, every day, he's like, I have to remind myself that I'm going to go in, I'm going to go into battle here. And today's the day that if I slip up even slightly, the last 30 years of work will completely be gone. So I think that's just huge,
Humility.
important.
Yeah. Humility is an anchor point. You have just got to realize that you are not master and commander of
Yeah.
the market.
No, you're just playing. So, hey, listen, I know it's getting close to the end of the day, so I'm not going to keep you any longer, but I think that was absolutely fantastic. To the audience, please go check out the trading book, go to Place Your Trades. And it's been under, I was going to look up your Twitter. It's been under you the whole time. So it's Anne Marie Trades on Twitter. Any words to leave the folks with before we go?
You know, I love trading. It's a passion. Every day I come, I learn something new. And every time I interact with other traders like you, I learn something both about myself and that other person. And if you are interested in the trading space and you want to see how people have been sort of getting through the motions and getting up and about the business that is trading, just realize you've got to be humble and you've got to be open and be willing to learn from anyone.
Yeah.
Don't look at someone and go, you know what, I got a lot more experience than da da da. Listen to what other people say, and you'll either learn about a struggle, a triumph, a study, or anything really, and it's going to help you in your path. Thank you so much for letting me spend time with you. I think it's great. I had a wonderful time.
I had so much fun with this. And I love that parting words that, this game is always changing. So someone who may have just gotten started may know something that you don't. And also bringing in
Exactly.
what we talked about from someone's work experience, they may understand something about trading or stock or something like that. So that was
Sure.
awesome. I really hope I can have you back at some point. Again, that was a lot of fun.
Absolutely. I'll
Awesome.
be running. Just let me know.
Thank you very much.
Take
Bye,
care.
guys.